Hello guys! For this video, we will help accountant and non-accountant taxpayer to understand the so-called EOPT or the ease of paying taxes of the BIR. We will try to highlight significant amendments to the tax code and its implication to business taxes and tax reporting compliance of taxpayers. So please stay tuned until we finish the discussion. In a significant move to streamline the tax procedures and reduce the burden of taxpayers, our government has enacted series of amendments to the National Internal Revenue Code through the Ease of Paying Taxes Act. This act introduced a number of changes designed to simplify the tax system, making compliance more accessible and manageable for individuals and businesses alike. This act was signed into law last January 7, 2024 and becomes effective after 15 days of publication. The main objectives of the EOPT law are the following. It intended to protect and safeguard the taxpayer rights and welfare, to modernize tax administration by providing mechanism that encourages easy compliance at the least possible cost and resources, and to update the tax system and adopt best practices, with the end goal of easing payment of taxes and encouraging compliance from the taxpayer. The EOPT law highlights the following notable amendment to the tax code. First on the list is the digitalization of BIR services. It also introduced the new classification of taxpayer. Next, it improves the manner and timing of tax filing and tax payment. Fourth on the list is the overall amendment of invoicing requirements. The next amendment is the VAT and Other percentage tax reporting. It also introduced relevant treatment of the income tax reporting, such as the deduction on gross income and revised procedure on filing creditable withholding tax refund. The next important benefit of the EOPT law is the simplified timing of withholding. It also expands the listing of individuals not required to file income tax return. The next highlight of the EOPT law is the new period of preservation of accounting records. And lastly, one of the good benefits of the EOPT is the removal of the annual registration fee of 500 pesos. Let's start with digitalization. At the heart of EOPT are several features to facilitate a more responsive tax administration framework. One of the best benefits of EOPT is this digitalization. The BIR was tasked to develop an EOPT and digitalization roadmap to help ensure ease of compliance with tax laws, rules, and regulations. Such an adaptation of simplified tax returns, streamlining tax processes, reduction of tax documentary requirements, and digitalization of BIR services. Are taxpayers now allowed to register online with the BIR and file and pay taxes electronically? The answer is yes. To entice foreign investors and facilitate their commercial dealings in the Philippines, EOPT offers registration facilities available to all taxpayers, including non-residents. Taxpayer registration, as well as the transfer and cancellation of tax registration, may be done manually or electronically. This newly enhanced system is called UROS. Don't worry, we will try to create a more detailed video of this new portal of the BIR to discuss its function and beneficial features to the taxpayers. Aside from the UROS, one of the digitalization roadmap introduced is the removal of traditional publication of BIR rulings, memorandum, and pronouncements. This is to help improve BIR performance and delivery of their services. For everyone's reference, prior to EOPT, before a particular ruling be implemented, it needs to be published to newspaper and BIR Gazette. But through this EOPT, the BIR may now use their website, pages, and other similar digital platform to announce and reach out to the public any updates and issuances. Such an efficient initiative from the BIR in today's digital age. Like in this example, prior to EOPT, this particular ruling needs to be posted to Manila Bulletin to be effective. Whereas, after the effectivity of EOPT law, this allows this particular ruling to be published through their website to inform the taxpayers. The shift towards digitalization is a cornerstone of EOPT, emphasizing the use of electronic platform for tax filings, payment, and other applications. This digital-first based approach not only speeds up the process but also reduces the environmental impact of paper-based systems. The law encourages the use of electronic signatures and online submissions, marking a significant step forward in modernizing the country's tax system. The next highlight of EOPT law is the newly structured classification of taxpayer. This is to ensure and facilitate a more responsive tax administration framework. The goal of EOPT law is also to streamline tax compliance and promote fairness. Previously, the BAR classified taxpayers only as a large taxpayers with a gross sales of at least 1 billion pesos and non-large taxpayers. And for the introduction of EOPT law, it now classifies taxpayer into 4 groups: the micro, small, medium, and large taxpayers, with the following thresholds for gross sales. For the micro, gross sales will be less than 3 million. For the small category, sales should be 3 million to less than 20 million. The next group will be medium. This particular group should be 20 million to less than 1 billion pesos. And lastly, taxpayer with more than 1 billion gross sales will be tagged as large taxpayer. Ano nga ba yung main reason why our legislator created new groupings of taxpayers? Well, one of the valid reason is that micro and small business sector comprises 99% of the Philippine business establishment. The amendment of taxpayer classification is significant because the EOPT law provides special concessions for micro and small taxpayers. This benefit includes the following. Number 1, it simplifies income tax return into 2 pages. It reduces 10% civil penalties under the Section 248 of our tax code. Third valid reason is that it offers 50% reduction on the interest imposed on any delinquent tax liabilities. It also reduced 500 as penalty for failure to file certain information. And fifth on the list is the reduced compromise penalty rate of 50% for violations. And now that the classification is based on gross sales, ano nga ba ang tinatawag na gross sales? Ano yung mga pwedeng isama at pwedeng ibawas sa pag-compute ng gross sales? As defined by EOPT law, gross sales is the total sales revenue net of VAT without any deduction. But it will exclude the following: compensation income if you are a mixed income earner, passive income, and tax-exempt income under the tax code. It also excludes the following. Number 1, covers of life insurance proceeds, gifts, retirement benefits, pensions, certain prize and rewards, GSIS, SSS, and other contributions. It also excludes any sales of bonds among other items. One of the possible question is that, paano nga ba ako makaklasify since we are into a transitionary period? For the initial classification upon registration, the new taxpayers must declare their expected classification based on their projected gross sales, or will notify for any reclassification thereafter. For those existing taxpayers registered in 2022 and prior years, will be categorized based on their 2022 annual gross sales. On the other side, taxpayer without submitted sales will be classified as follows. VAT taxpayer will be considered small, and non-VAT taxpayer will be considered as micro. The next well-known benefit of the EOPT law is the manner of filing and payment of taxes. One of attributes of a sound tax system is administrative feasibility. It means that tax laws should be capable of being effectively administered and enforced with the least inconvenience to the taxpayer. The taxes to be paid must be simple and clear, and the tax system should allow taxpayers to conveniently file their tax returns and pay their taxes. And that's EOPT is all about for. Just for everyone's reference, this is how our tax system evolved through the years. First pilot run of the EBIR form was released last October 2012. The EBIR form is developed primarily to provide taxpayer with accessible and convenient service through easy preparation. It is an alternative mode in preparing tax returns, which deviate from the conventional manual process of completing tax returns, and that are highly susceptible to human error. First version of the EBIR form showcasing 31 forms, both in offline and online module. And it was last 2014, from being the alternative mode to filing, the EBIR form becomes the mandatory system in filing tax form for all non-EFPS filers, and primarily to remove the manually stamping of BIR tax form for nil return. Also in the same year, BIR allows submission of alphabetical list of payees through online from the traditional submission of floppy diskette or CDs. Then year 2018, the submission of alpha list of payees used to be monthly was streamlined by requiring the filing on a quarterly basis. Year 2019, in the case of top withholding agents, the preparation of semestral list of regular suppliers was discontinued. During pandemic year 2020, BIR introduced the so-called EAFS, so-called Electronic Audited Financial Statements. It's an application system that enabled taxpayer to submit their filed income tax return and audited financial statement and other attachments. And last year, 2023, taxpayers were no longer required to prepare and file their VAT returns every month, as the filing and payment of VAT was already made on a quarterly basis. Now, under the EOPT law, tax filing and payment were made even easier, with the file and pay anywhere rule. The filing system are as follows. Tax filing of tax returns shall be done electronically in any of the available electronic platforms. However, in case of unavailability, manual filing should be allowed. As defined by the EOPT law, electronic platforms are as follows. Number 1, the EFPS or the so-called Electronic Filing and Payment System. System should be used for those allowed, mandated, and registered under this system. The second platform is the so-called EBIR form. System should be used by the non-EFPS filers. The third on the list is the so-called Authorized Tax Software Provider. Of the EBIR form system, taxpayer may use or subscribe to any accredited TSP like QuanTax, TaxWiz, TaxSumo, and Management. These are the existing accredited tax software provider. And for the payment system, prior to the EOPT law, you need to pay to any accredited banks within your RDO jurisdictions. Non-compliant or payment made other than your RDO will result to 25% penalty for wrong venue. For example, you are under Taguig and paid in Makati. You will be subjected to 25% wrong venue penalty. And for those EFPS filers erroneously filed under the EBIR form without prior announcement will be assessed of 25% penalty as well. That's the good thing now under the EOPT. You are allowed to pay to any bank, no need for any prior circulars from the BIR. This also a relief to taxpayer that the civil penalty of 25% will be no longer applies if the return is submitted to any Internal Revenue Officer. Below are some reminders to be noted to be compliant with the EOPT law. Number 1, file your tax first before paying to any accredited banks. Bank will not entertain tax payment without the email confirmation attesting your electronic filing. EFPS filer should still be required to file and pay within the system. But in case of unavailability, they can use EBR form or manual filing and pay to any accredited bank. For manually completed tax forms, bank will only accept up to 20,000 cash, while check will be accepted regardless of amount. Third individual, if both self-employed and same RDO, they should file jointly. Otherwise, if with business and with separate RDO, they will be allowed to file separately. As a licensed accountant, I have witnessed how the BIR tax filing and payment system has evolved. From manual writing, from using interactive forms, and now to this electronic system of filing and payment, I really want to give credit to the previous administration and to date, who's trying to keep within the standard and continuing to pursue measures to simplify the manner and process in filing and payment of taxes. But, of course, there will be more enhancement to the system like online closure of business, online filing and receiving of refund. But surely, that will be a work in progress soon. One of the well-known changes brought by EOPT Law is the new invoicing requirement. This act simplified VAT invoicing by standardizing sales of goods and services. This move not only reduces confusion but also streamlines the process for businesses, making it easier to comply with tax regulations. Prior to EOPT, the main supporting documents for the sales of goods is an invoice, whereas upon rendering and collecting service fees is the so-called OR or official receipt. You need to have the separate documents for your transaction to be valid for claiming input VAT. Isa to sa mga reason why BIR simplifies the document needed to claim tax, na malilito yung taxpayer kung OR or invoice ang hihingin sa isang supplier. Pag kumain sa resto, sa fast food, pag bumili sa mall or any establishment, and that's invoice for both VAT and non-VAT taxpayer. Under the EOPT law, invoice now the primary document supporting sales of goods and services. But taxpayer is not precluded from issuing supplementary document other than the sales invoice. This includes official receipt, delivery receipt, billing statement, statement of account, and others. But for the purpose of VAT, these supplementary documents are not valid proof of transactions. Invoice may include other descriptor words such as service, sales, commercial, billing, and others. Here are the guidelines in issuing an invoice. Number 1, invoice may include added descriptor words such as service, sales, commercial, cash, and miscellaneous invoice. Second, invoice is the main evidence for the sales of goods and services. At the same time, it can serve as acknowledgement of money or payment received for goods and services. Next, presented here are the information required on the face of an invoice. First, the seller's information, title of the invoice, date of transaction, buyer's details, serial numbers, quantity, unit cost, description of goods and services, total amount of sale with VAT shown separately, breakdown of sales, if VATable, zero-rated, VAT exempt, or sales to government. Transaction with senior citizen, PWD, or solo parent, it should include the following: the ID number, discount availed, and their signature. The bottom part of the invoice, it should show the following: the ATP serial number, permit number, the date of issuance, and the approved serial number. Number 4, 4 tickets issued for transportation, parking, amusement, cinema, and others will be considered as the main document for sales of services, provided that the word invoice is indicated on its face and contains all the relevant information based on this act. Then, in terms of threshold amount on the issuance, rules are as follows. Prior to EOPT, The seller is required to issue an invoice or OR for every 100 pesos single transaction. And under the EOPT law, ceiling amount are as follows. For VAT registered seller, issuance will be regardless of the amount of transaction. They are mandatory to issue invoice for every single sales. And for the non-VAT, issuance shall be for every 500 single transaction. And for their sale below 500 pesos, seller should issue a single invoice for the aggregate amount at the end of the day. To note, the 500 pesos will be subjected to adjustment for every year using the Consumer Price Index. For those taxpayer who is not a VAT registered and erroneously issued the VAT invoice, they will be liable to pay the VAT without the benefit of any input tax credit. Plus, they will be assessed with 50% surcharge. They will also need to pay the liability of the percentage tax. As part of the VAT registered buyer, they can still claim the input VAT as long as the requirement for the VAT issuance are met. In other words, kapag ikaw ay isang non-VAT supplier, accidentally issued a VAT registered invoice, liable ka to pay the VAT, percentage, and 50% surcharge. A common question encountered by the taxpayer is that, what will now happen with their unused ORs? Ano yung pwede nilang gawin? Magagamit pa ba nila? Or a total loss on the part of the taxpayer? Since the intention of EOPT law is to provide fair tax policies, the BIR issued a certain memorandum to address these issues. First option is that to consider these unused booklets to be as a supplementary document. During the transitionary period, all unused or unissued official receipt may still be used as a supplementary document until fully consumed, provided that the phrase, "This document is not valid for claim of input tax," is indicated on its face. This will only serve as a proof of payment that cash has been received or that payment has been collected for the particular goods and services. Shown here is the sample. The second option for the taxpayer is to convert the OR booklets to invoice. Taxpayer shall be allowed to strike through the word official receipt on the face and stamp the word invoice. These can be issued as the primary invoice to a buyer or purchaser until fully consumed, provided it also indicates the other required information for an invoice. Another requirement for this converted OR to invoice is that the taxpayer should be compliant on the requirement to submit inventory of booklets of converted OR within the allowed time frame. For everyone's reference, this is the sample of inventory list required for submission. Conversely, for CRM and POS, they are required to configure the system on or before December 31, 2024. Any extension will be subject for approval. The penalty for non-compliance for the invoicing requirement are as follows: 1,000 pesos but not more than 50,000 and imprisonment of less than 2 years but not more than 4 years. The EOPT Act is a positive shift toward a more efficient and tax-friendly tax environment. Businesses that embrace its provision and stay informed will be better positioned to drive into an evolving tax landscape. Valid supporting documents really play a pivotal role in the Philippine tax system. Claim of tax deduction may be disallowed by the BIR if you are not compliant with the requirements. The solution offers by EOPT not only diminishes ambiguity but also simplifies procedures for businesses, which will facilitate easier compliance with the new regulations. As a result from shifting OR to service invoice, the next relevant features of an OPT are the various amendments on the tax base and other rules governing VAT and percentage taxes. We will cover the following known changes on VAT and percentage taxes. Under the VAT able amount to be declared for the sale of service. Second, the output VAT on uncollected receivables. Third, changes on the pronouncement of the VAT-exempt transactions. And lastly, the improvement on the process of VAT refund claims. On the percentage tax, we will highlight the changes on the tax base in computing the percentage tax. Let's start with the notable changes on VAT tax base. As the name suggests, the EOPT Act aims to increase the government's revenue by improving tax administration, by moving from OR to invoice, service industries, and express shift from cash to accrual basis of tax reporting. While taxpayer from the service industries has a negative perception on this provision, due to shouldering payment of VAT even if not collected, it finally removes the difference in the tax treatment of output taxes for the sales of goods and sales of services. Finally, it will also offer a consistent metric across the tax systems. Prior to the EOPT, tax base are as follows. The sales of goods, whether paid or not, are all reported for VAT reporting purposes. While for the sales of service, liability to pay VAT starts once they collected the specific revenue. After the EOPT, VAT reporting measure becomes standard for both. Whether sales of good or sales of service, liability to pay VAT arises from the issuance of invoice. While this simplifies the VAT reporting method, it plays a big impact on the service provider's cash flow because it will compel them to remit the output VAT based on the issuance of invoice regardless of the probability of future collection. In other words, kahit di pa bayad ng customer their invoice, sellers of goods and services are both liable to pay the VAT. To address this concern, the EOPT offers through the introduction of the output VAT credit on uncollected receivables. This will reprieve the taxpayer who have not collected the receivables otherwise already reported for VAT purposes. What is the so-called output VAT credit on uncollected receivables? Under the EOPT law, this is defined as a seller of goods or services may deduct the output VAT pertaining to uncollected receivables from its output VAT on the next quarter. But the following conditions should be met to be allowed for the deduction. Number 1, it should take effect after the effectivity of this law. Second, the sale is on account or credit. Third, there should be a credit term. Fourth, the VAT is separately shown on the invoice. Fifth, the specific sale is reported under the SLSP. Sixth, the period agreed upon has already lapsed. Lastly, the VAT component is not declared as a doubtful account expense for your income tax return. As an illustration, if BDN Corporation sold goods worth 50,000 to a client's on account for the period of 90 days or until September 28, 2024, BDN fails to collect the said receivable, it may claim the output VAT credit for the quarter ending December 31, 2024. In the case of recovery of uncollected receivable, the output VAT pertaining thereto shall be added to the output VAT of the taxpayer during the period of recovery. In the foregoing example, if BDN Corporation collected the sales on account on March 5, pending output VAT should be reported on March 31, 2025, the quarter period of recovery. Here's a general guidelines to be observed both by the seller and the buyer. For the seller side, in case of the seller avails the output VAT credit on uncollected receivable, it requires to stamp claim output VAT credit on the face of the invoice. The corresponding copy should be furnished to the buyer. And as mentioned, in case of recovery, the output VAT pertaining thereto shall be added to the output VAT during the period of recovery. In case if there's a partial payment of the said uncollected receivable, the amount collected therefrom and the balance of the uncollected receivable shall also be indicated on the face of the invoice. For the buyer side, the corresponding input VAT claim shall not be allowed as input VAT credit if the seller claims the output VAT credit on uncollected receivable. Ibig sabihin, if si seller is nag-claim ng deduction from output VAT of unpaid invoice, buyer should adjust the input VAT reporting to effect this deduction. Should the buyer continue to claim the input VAT, they will be liable for deficiency taxes. In case the seller fails to provide the copy of a stamped invoice, the buyer can voluntarily reverse its claimed input VAT in its VAT return. Moreover, in cases where goods sold previously were returned by the buyer during the agreed-upon period, the return is treated as a sales return and a deduction from the gross sales in the quarterly VAT return when the return happened. Conversely, if the goods previously sold were returned by the buyer and the seller has claimed the output VAT credit on uncollected receivable, deduction from the sales of output VAT shall be allowed since the claim of tax credit has already been made. For everyone's reference, here's the new look BAR tax form to effect VAT adjustment on uncollected receivables. There are some possible questions on output VAT credit on uncollected receivables. The one who are not qualified to avail the tax credit on VAT on uncollected receivables. Those labeled as cannot be located taxpayers. Second, those with filed complaints at the DOJ under the run after the fake transaction and run after the tax evaders. And number 3, other taxpayers identified by the commissioner. Question: should the seller issue an invoice upon recovering a previously collected receivable? Seller is not required to issue a new invoice. Instead, the seller should stamp the original invoice with the phrase recovered and indicate the amount collected. Seller can also issue supplementary documents such as debit memo or credit note stating recovery of previously reported uncollected receivables. And the good thing, the benefit of claiming output VAT credit is merely an option. This means that despite eligibility to claim output VAT credit on uncollected receivables, the seller may opt not to avail of it. For some taxpayer, it would appear that the more practical approach is to waive the right to claim output VAT credit, especially in cases where the probability of collection is high. Noted by the BAR, this will save the hassle on the part of the seller to claim the said output VAT and then reverse the same in eventual collection. While the newly implemented output VAT credit provides an additional form of relief, it is advisable for the taxpayer to exercise caution in weighing the cost and benefit associated with this provision. For the VAT-exempt transactions to be aligned with the changes on invoicing or VAT computations, the following are the amendments to be noted. Prior to the EOPT, VAT is computed from the gross selling price. And upon effectivity of the Act, the VAT shall now be computed based on the gross sales. The annual sale or lease of goods and performance of service which does not exceed the 3 million is a VAT-exempt transaction. VAT-exempt threshold. All provision mentioning the VAT-exempt threshold of the 3 million shall now be stated as follows. The amount of VAT threshold herein stated shall now be adjusted to its present value every 3 years using the Consumer Price Index, as published by the PSA or the Philippine Statistic Authority. The fourth to be highlighted is the enhanced procedure in filing VAT refund claims. Prior to the EOPT, there were no guidelines in filtering application received by the BAR. No definite timeline for the BAR to action for specific applications. These reasons promotes discouragement for many taxpayers not to pursue the refund due to administrative costs of hiring professionals processing the refund claims. And now, under the EOPT campaign, it introduces the risk-based approach to the verification and processing of VAT refund. These changes are poised to have a substantial impact on the way businesses manage their VAT refund claims and promote a more streamlined and taxpayer-friendly approach. What is the 3-layer risk base in classifying refund of taxpayers? These are the low risk, medium, and high risk. Let's try to define this 3-layer by presenting the following: the requirements needed for this application, the scope of verification required by the BAR, and factors to be considered in the classification. Submitting requirements. All the 3 layers required to submit the following documentations. All VAT forms subjected for the refund. This VAT form should include the proof of payment and the tax email confirmations. The second relevant document is the so-called SLSP or the Summary of Sales and Purchases, with the corresponding email validation from the BIR. And the last important documentations are the original invoices supporting the sales and purchases enumerated on your Summary of Sales and Purchases. For the scope verification required by the BIR, or it simply means gaano kadami yung kailangang i-validate ng BIR sa mga nasubmit na documents, rule are as follows. Taxpayer under the low risk, BIR is not required to have a thorough validation on the submitted requirements. Well, even if the EOPT entails no required examination or verification, BIR may still apply the case-to-case verification. Under the medium category, BIR is required to verify the 50% level of the submitted documents. And for all categorized as high-risk application, the BIR is tasked and mandated to review the 100% of the required documentations. For the factors required for the classification of application, the following guidelines should be considered. Number 1, the claims filed by the first claimants will be automatically considered as a high risk and will remain as such for the succeeding 3 VAT refund claims. In the event of the full denial of a claim, the succeeding claim filed will be classified as a high risk. For the third factor, those applications tagged as medium risk claims, verification will be adjusted to 100% if the assigned revenue officer found at least 30% disallowance of the amount of VAT refund claims. Number 4, claims classified as a low risk for 3 consecutive filings of VAT refund will be subject to mandatory full verification on the 4th refund claim, regardless of the risk classification. Number 5, VAT credit or refund claims for any unused input tax filed by a registered taxpayer whose registration has been cancelled due to retirement or from cessation of business, or due to any changes or cessation status, will be classified as high risk and will require full verification. These are the taxpayer who filed business closure in the BIR office. Then, lastly, the risk classification will be made for every filing for taxpayer filing quarterly. Well, I hope the BIR will issue a more detailed guidelines and memorandum in classifying VAT refund application to encourage more taxpayers. As for the timeline stated on the EOPT Law, a VAT refund will be granted within 90 days from the date of submission of the complete documentary requirements. In case of full or partial denial of VAT refund claims, the taxpayer may appeal to the Court of Tax Appeal within the 30 days from the receipt of the decision denying the claim. However, in case of inaction of the BIR within the 90-day period, the taxpayer has the following options. Number 1, appeal to the CTA within the 30-day period after the expiration of the 90 days required by the law to process the claim, or to forgo the judicial remedy and await for the final decision of the BIR on the application of the VAT refund. And just to note, the risk-based approach will cover VAT refund claims that are filed beginning July 1, 2024, although the EOPT becomes effective last January. The EOPT law does not only affect the VAT computation but also the percentage tax. As part of the result from shifting official receipt to invoice, there is a changes on the pronouncement in computing the percentage tax from the term gross sales or gross receipt to gross sales only. This will cover the following revenues. Number 1, person exempt from VAT. Second, domestic carriers, keepers of garage. Third, international carriers. Fourth, franchises. Lastly, the tax on overseas dispatch, message or conversion originating from the Philippines. In summary, the changes brought by the EOPT Act constitute a significant advancement in regulatory reform. However, their implementation is not without difficulties. Certain provisions may require additional refinement to effectively achieve its objectives. Addressing these birth pains is essential for the Act's successful execution. If you are not confident in implementing the new rules, best to engage professionals to be compliant to maximize the solution brought by the EOPT. One of the relevant amendments introduced by the EOPT is the new rules on income tax computation. Number 1, the requirement of withholding taxes for the deductibility of expenses. And lastly, the revised procedure in filing creditable withholding tax refund. Let's discuss first the number 1. One common issue that the BIR raises during tax audit is the deficiency of withholding tax, which usually arises from discrepancies between expenses recognized in taxpayers' audited financial statement versus the income tax return, and those reported in the withholding tax returns. These discrepancies are easy for the BIR to spot but often difficult for the taxpayer to refute or to justify. This is the old rule called no withholding tax, no expense allowed to be deducted on your income tax return. Prior to the EOPT, a deficiency withholding tax assessment will also result in a deficiency of income tax exposure, since the related deductible expenses will also be disallowed. This is supported under the Section 34 of the Tax Code, which states that expense will be allowed only as a deduction for income tax purposes only if it is shown that the tax required to be deducted and withheld has been paid to the BIR. So, it only means para maging allowed as deduction to your taxable income, you need to withhold from your supplier and remit that withholding tax to the BIR. For example, para maging allowed ang rental expense to be deducted to your taxable income, you should withhold a 5% withholding tax. Same case for those under the TAMP tax program. They need to withhold 1% for the goods purchases and 2% for other services. Whereas under the EOPT, withholding of taxes as a requirement for deductibility of expenses is repealed. Thus, non-withholding taxes in certain payments will no longer be grounds for disallowance of claims for deductible expenses. It automatically repealed the overdue concern for non-withholding, provided that they pay the withholding tax, including the interest incident to the failure to withhold tax, surcharges if applicable, at the time of audit or investigation. And as a reminder, the EOPT only relaxed the policy on deductibility of expenses for income tax purposes. The responsibility to withhold is still being enforced. An accountant in practice, we still recommend observing the relevant withholding taxes based on the nature of expenses to avoid future surcharges and penalties. As an illustration, after the effectivity of the EOPT law, this particular box on your income tax return will not include non-deductible expenses due to non-withholding. The next change relevant to the income tax is the revised procedure on filing creditable withholding tax refund. Perhaps one of the more welcome changes under the EOPT law is the clarified and streamlined process of tax refund application for unutilized excess income tax credit and refunds. Who can avail credit or refund of unutilized excess income tax credit? Number 1, regular claims of taxpayers under the going concern status. Second, those undergoing dissolution or have ceased business operation. And lastly, this also covers taxpayers with erroneously or illegally received or penalties imposed without authority. Before the introduction of the EOPT, claiming of tax refund has no definite timeline, which provides discouragement to the taxpayers. But with the new rule, This will give more confidence to the taxpayer to revisit their available claims with the BIR. Start with the regular claims of taxpayer of going concern status. Generally, a taxpayer who has paid excess income tax during the year has three options to recover such excess. Number 1, they may opt to carry over such excess against the income tax liabilities in the succeeding period. So, ibig sabihin, taxpayer will apply the excess tax credit to pay future income tax payable. Second, taxpayer may choose to request a tax credit certificate to be used to settle other tax liabilities except withholding taxes. And lastly, taxpayer may file a claim for refund for the excess income tax paid. As a rule, once a taxpayer chooses the carryover option, it is irrevocable for the taxable period and no application of cash refund credit certificate will be allowed. And under the regular claims, requisites, timeline, and remedy of taxpayer are presented as follows. To be valid for tax refund, the income upon which the taxes were withheld was included as part of the gross income declared in the annual income tax return. Ibig sabihin, the specific revenue kung saan tayo nag-file ng refund should be included in our income tax return. Second, provide a copy of the valid withholding tax certificate or the so-called BIR 2307. For the timeline, filing to the BIR should be made within the 2 years from the date of filing the annual income tax return. Then, the BIR is required to issue decision 180 days from the acceptance of application. And as a remedy of the taxpayer, they have 30 days from the receipt of such denial or from the lapse of 180 days in case of inaction to appeal to the Court of Tax Appeals. Another type of refund is the claim of taxpayers undergoing dissolution or cessation of business. With the passage of EOPT Law, new guidelines were introduced on claims for refund of excess income tax paid in case of dissolution or cessation of business. As an exception to the irrevocability rule, taxpayer who previously chose the option carryover may still claim the refund provided that they have permanently ceased operations. As a timeline, the BIR has 2 years from the submission of complete business closure documentary requirements in application of tax refund to decide and refund the excess taxes. And kung mapapansin natin, the 2 years is longer from the 180 days general time frame for the BIR. This is primarily to accommodate completion of mandatory audit. And any approved refund, if any, shall be released only after the completion of such audit. The last source of refund, the tax or penalty erroneously or illegally collected without the authority. To process these claims, the taxpayer should submit a written claim for the refund and proof of payment for such taxes. Timeline: the taxpayer should file within 2 years from the date of payment of tax and penalties. For this type of refund, the BIR has 180 days to decide upon the claim of refund or TCC. And same under the regular claims, taxpayer can file judicial claim 30 days from the receipt of such denial or from the lapse of 180 days in case of inaction from the BIR. And thus conclude the revised procedure on filing tax refund. One of the objectives of the EOPT law is to improve the efficiency and effectiveness of tax administration. Taxpayer and accountants are expecting to see a more seamless processing of tax refunds. Just to note, however, that despite the EOPT law taking effect in January, this particular rule will only apply to tax refund claims that are filed starting July 1, 2024 and onwards. One of the tax administration improvement introduced by the EOPT is the simplified manner of withholding taxes. Under the old rule, there are 3 relevant dates to be noted. Number 1, upon payment. This covers the advance, prepayments and deposit to be paid. Second, the date when the obligation becomes payable. And the third date is accrual of obligation. So prior to the EOPT, kung alin dyan yung nauna, that's when the obligation to withhold and remit becomes enforceable. Whereas, after the EOPT law, the taxpayer left with only one date to be considered, and that's the liability to withhold is the date when the obligation becomes payable. But how to determine if the particular transaction becomes payable? Based on the definition of the EOPT, the issuance of invoice is an adequate support and trigger point for the obligation to considered as payable. Example, every time you deliver the goods, you need to issue an invoice. Every time you render a service, you need to issue an invoice. For both scenario, it demonstrates that liability is already payable, thus, a liability to withhold should be enforced. This change promotes clarity on the treatment of taxpayers. This will help them create measures and monitor tax obligation and to avoid penalties for the late timing of withholding. Another pros welcomed by the EOPT is updating the list of individuals exempted for filing the income tax return. Prior to the EOPT, the following individuals are exempted from filing the annual income tax return. Number 1, individuals earning purely compensation income and whose annual taxable income does not exceed the 250,000. This individual will be covered by their employer by filing the BIR Form 2316. The second group are individuals whose income tax has been correctly withheld by their employer. These are also covered by their employer by filing the BIR Form 2316. The third group of individuals are those whose sole income has been subjected to final withholding taxes, such as interest on peso bank account, capital gain on the sale of shares, dividend income, and any housing benefits subjected to final withholding taxes. The fourth group are those under the minimum wage earner, which also to be covered by their employer by filing the BIR Form 2316. Under the EOPT, expanded the list by adding this group of individuals: Philippine citizens who are working and deriving income solely from abroad, as an overseas contract worker or overseas Filipino worker are no longer required to file their income tax returns. Just to note, the only exempted Filipino are those with income abroad. Filipinos receiving income from abroad and income derived here in the Philippines will still be liable to file their income tax return. This expanded list of exempt individual is just one manifestation presenting a significant step towards a more taxpayer-friendly tax system. The next advantage offered by the EOPT is the new period of preservation of books. To be aligned with the purpose of the new law, the BIR addressed compliance requirement on the preservation of books of accounts. Prior to the EOPT, the taxpayer is required to preserve the books for the period of 10 years. This is the period beginning from the last entry in each book until the last day within which a commissioner is authorized to make assessment. Then, the EOPT revised this preservation as follows. All books of accounts and accounting records of taxpayer shall be preserved for a period of 5 years from the day following the deadline for filing of a tax return, or if filed after the deadline, from the date of filing of the return, for the taxable when the last entry was made in the books. What files to be maintained? For those manual and under the loose leaf category, the preservation shall be in hard copies, whereas for those under the computerized books, preservation shall be in electronic copies. Some guidelines: if the taxpayer has any pending protest or claim for the tax credit or refund, the books of accounts concerned are material to the case. The taxpayer is required to preserve the books of account and accounting record until the case is finally resolved, even beyond the prescribed 5-year retention period. This is for the reason that you need to keep your files to back up or support your claims. For independent auditors, they are responsible to maintain and preserve the electronic copies of the audited certified financial statement, including the working papers, for the period of 5 years from the due date of filing the annual income tax return or the actual date for filing thereof, whichever comes later. This is for the BAR to request support for all client claims in audit. For the books of accounts of tax-exempt organization or grantees, examination shall be conducted by the BIR for the purpose of ensuring compliance with the condition under which they have granted tax exemption and their tax liability if any. Although they are exempted to taxes, their administrative compliance to preserve books shall remains. And another provision of EOPT states that examination and inspection of books of account and accounting records shall be done in the taxpayer's office or place of business or in the office of the BAR. And that's the new compliance requirement for the books of accounts. Then, lastly, some of the improvements on the registration and updating of registration process are as follows. Number 1, the removal of the 500 pesos annual registration fee for all taxpayers. And in case of business transfer, there's no need for the taxpayer to clear first their open cases or pending liability before allowing your new RDO. But for any pending LOA prior to the transfer, your old RDO under the jurisdiction will continue the examination. And those are the benefits offered by the EOPT. Doing business with the BAR and paying taxes has never been easier. The ease of paying taxes act represent a significant stride forward to the following. Number 1, tax compliance becomes more manageable and user-friendly, reducing complexities of tax filing and payment processes. More streamlined, definite, and efficient refund procedures, addressing issues on taxpayer classifications, and the reduce and offers concession offers for micro and small taxpayers. In today's dynamic business landscape, tax regulatory changes wield a significant influence on the tax reporting practices. Indeed, the EOPT has made a far-reaching implication even from individual income tax aspect. Hence, it is incumbent that the intention and catalyst of this regulatory shift, coupled with its complexities and opportunities, be understood by individual taxpayers. Yes, I agree, as an accountant, taxes are an integral part of nation building. It is pivotal role to urge the nation towards progress and enable the government to deliver the essential public service to its citizens. When we, as a citizen, understand how crucial our tax contributions are for the country's growth, paying taxes becomes more than just a compliance or a mandatory practice. With the changes brought by the EOPT law, taxpayers are expected to adopt new, easier processing in filing and payment of taxes. For business owners, staying abreast of all the latest tax policies is crucial for optimizing your tax strategies and ensuring compliance. To be at ease and confident on the proper and effective implementation of the new rules, best to engage professionals to stay compliant. If you have some questions and clarification, please feel free to leave your comments below so we can address as soon as we can. Please also hit the subscribe and hit button to be updated from our video releasing. Thank you for watching!